Today we see a particularly dangerous reaction with the SPY QQQ losing momentum, materializing what could turn out to be a top signal. From a technical point of view, this suggests a short-term bearish reversal, while we may see a medium-term correction over the next few days. Now, with many stocks far from their support levels, a correction would be welcome because the risk-reward ratio will improve and we would probably have many other opportunities ahead. So let's see what to expect next in this video. Welcome to the Finance Hydra channel. My name is Nathan. It's a pleasure to see you guys over here. Now, SPY making a quite solid, interesting bearish reaction. This could be a top signal because we are not only making one single bearish candlestick pattern, but we are also losing a few short-term support levels like yesterday's low, triggering what could be a possible shooting star doji candlestick pattern. We are also losing the 21-hour EMA on the 1-hour chart, reinforcing the idea that it is reversing the short-term bullish momentum. So far, we were doing nothing more, nothing less than higher highs, higher lows, right? We were clearly bullish over here. Now, by losing the previous support level, by losing the 21-hour EMA support level as well, we are entering bearish territory, suggesting a short-term reversal, which means a medium-term pullback on the daily chart. In this case, any pullback to our next support levels could present another buying opportunity. What are our next technical support levels? First, $600. Second, the 21-day EMA, the exponential moving average on the daily chart. These are our two most important support levels to aim right now. Any bullish reaction around this area, again, could be just another buying opportunity. So this pullback would be very interesting, would be very good for many stocks that are far away from their support levels, increasing the overall risk-reward ratio in the broad market. Why am I aiming for buying stocks near our support levels? Because we are in an uptrend. We are still doing higher highs, higher lows. While we are in an uptrend, we buy near support levels with a good risk-reward ratio. Nathan, what if we reverse this medium-term trend? So far, there is no technical evidence of a mid-term reversal, only a short-term reversal. Now, we see the possibility of a correction to our next support levels if SPY fails in reacting around this double support level. If SPY loses the $600 again along with the 21-day EMA, then alright, we are gonna turn bearish on the daily chart. But as long as we stay above this key point from a technical point of view, SPY will maintain its upward momentum. Remember, trading is reactive, it is not predictive. I don't know if SPY will reverse this bullish sentiment or not on the daily chart. I don't know. I don't need to know in order to trade well. All that I know is that if we see any bullish reaction over here, maybe we are gonna see many other opportunities in the market, period. All right, let's not try to predict the market because pro traders do not try to predict. Trading is reactive, it is not predictive. All right, now as far as I know, QQQ is trying to make a top signal. It is not as clear as SPY. We are not necessarily making a huge bearish reaction on the daily chart. However, on the 1-hour chart, we see QQQ losing the 21-hour EMA. We see the possibility of a very small head and shoulders chart pattern, right? Either way, by losing the neckline, which is around this support level over here, $521.22. By losing this key point, we are gonna trigger the neckline of this bearish reversal chart structure. A head and shoulders is a quite reliable bearish reversal one because, as far as I'm aware, it reverses the trend much more often than not. I don't remember the specific statistics regarding a head and shoulders, but I know that after the breakout of the neckline, we see a pullback again to the resistance area roughly 66% of the time, according to Thomas Bukowski's studies. This does not ruin the bearish sentiment, but it might present a short-term short opportunity, right? But on the daily chart, we are still very bullish. As long as we stay above the 21-day EMA, above this purple trend line over here, we are gonna maintain the bullish bias. Nathan, what if we lose this purple trend line? Then alright, we are gonna reverse the bullish sentiment and turn bearish on the daily chart, suggesting a sharper pullback on the weekly chart, maybe to the 21-week EMA, or in the worst case scenario, to the support line of this ascending channel. Alright, so we gotta be very careful on QQQ right now. For now, let's expect a pullback, okay? And then we'll see how it will react over here. Any bottom signal could be another buying opportunity. Alright, meanwhile, we see Nvidia collapsing today, losing the 21-day EMA. One of you guys warned about the possibility of a head and shoulders chart pattern, right, on Nvidia. And that's plausible, it does make sense, but the neckline is around 132. Okay, so we gotta lose the 132 in order to technically trigger this head and shoulders chart pattern. Otherwise, we could recover from here. We could see Nvidia bouncing to higher levels, retesting the 150 all-time high again, but so far there is no meaningful reaction. Okay, we are just entering bearish territory. We do not see a bottom signal. We only see a bearish continuation. In theory, 132 is going to be our next technical support level. All right, so Nvidia is a hold to me, in my humble opinion. Of course, you can hold it, but if you are a long-term, especially if you are a long-term investor, but the 132 is our most dangerous support level. By losing this key point, we could trigger a sharper correction on the weekly chart, possibly losing the 21-week EMA, and that's not gonna be good for Nvidia. We could easily retest lower levels like the 115 or maybe even the $100 next in the near future, in the next few weeks. All right, so 132 is our major inflection point for Nvidia. Only by losing it, we are gonna reverse the midterm bull trend. Regarding Tesla, we see a bearish reaction. Apparently, I'm so sorry, we are going up today, right? 0.15. However, when I say bearish reaction, is because we see a bearish candlestick pattern. This candlestick pattern appeared right after Tesla retesting the $400, which is a round number and a psychological resistance level. Again, the market has a thing for round numbers, and right now Tesla is finding a resistance level below this key point. If we close below the $384, we are gonna probably see a top signal and a possible pullback to the next support level, which is near the 21-day EMA and near this purple trend line as well. All right, we could easily correct all the way down to this key point, which is also gonna be very close to the $358, which was the previous top level 1, 2, 3, 4, 5 times in the past. It is supposed to act as a resistance level, I'm so sorry, as a support level for us in the future. All right, so this entire area is going to be a meaningful support level for Tesla if we actually materialize a top signal by losing $384. Nathan, what if we don't lose this key point of yours? We are gonna keep going up. The all-time high is our next technical resistance level and a technical target for us. Therefore, we could easily retest this key point next, and then we'll see how Tesla will proceed. So far, there is no clear top signal, but we could see one. Either way, $384 is our next major inflection point in Tesla. And guys, remember, if you want to learn about all the top signals, all the bearish and bullish reversal chart structures I use on a daily basis, just join the 5% project. You have 7 days for free just to learn our trading methodology. You can download our exclusive ebook on technical analysis, where I detail every single aspect of our trading methodology, how to read candles, how to identify chart patterns, and how to trade them. Therefore, it is the perfect environment for you to learn, because I don't only teach you the theory, but we practice our theoretical knowledge every single day together. I share many trading strategies, not only in SPY, QQQ, Nvidia, and Tesla, but in many other stocks. I identify many incredible opportunities nearly every single day. So just join us over there if you want to learn more about TA, if you want to improve your performance, if you want to trade with a clear strategy and without stress. Just take a look at the 5% project. The link to my website is in this video's description. Okay, now this is gonna be our next support area for Tesla if a top signal materializes. AMD, just like Nvidia, is collapsing. However, here the situation is a little bit more delicate because we are clearly losing our support levels. We are below the 21-day EMA, clearly in bearish territory, not making any single bullish reaction yet. On the weekly chart, we are losing this purple trend line. It would be perfect to see AMD reacting above the support line. AMD was a very promising stock. Right now, it is not anymore. We can't say it is promising right now at this moment. And by losing this support level around the 130s, we are gonna trigger another bearish continuation all the way down to $121.83, our next technical support level and a technical target of this bearish chart structure. Because as far as I know, since AMD triggered this head and shoulders chart pattern, we have been doing just lower highs, lower lows, right? So the next technical low is supposed to be around 120. Okay, is there any bottom signal, any bullish reaction suggesting that we could avoid this scenario? No, not yet. Maybe there is the slim possibility of today's reaction be a possible exhaustion bar. Okay, but it is way too soon to tell. We would need to see a miraculous reaction tomorrow, breaking and closing above today's low in order for this to be a classic technical exhaustion bar, suggesting an exhaustion of this bearish sentiment. So far, there is no bullish reaction. Remember, trading is reactive. We can't predict the future, so it is not predictive. Meanwhile, we see Palantir. This one is making a bearish engulfing candlestick pattern. According to Thomas Bukowski's studies, a bearish engulfing reverses the trend 79% of the time when triggered. I also described these statistics on our exclusive ebook on technical analysis, which you can download for free on our Telegram channel. But right now, we see a bearish engulfing on Palantir, suggesting a possible top signal if triggered. What do I mean with if triggered? If we lose and preferably close below today's low tomorrow or in the next few days. That would be a technical bearish reversal chart structure for Palantir on the 1-hour chart as well, suggesting a bearish pivot point on the daily chart, a bearish candle chart structure. We see the 21-day EMA, which could be another support level, but if we trigger this bearish engulfing, we could easily correct to even lower levels, possibly making a top signal on the weekly chart as well. In this case, we could correct all the way down to the 21-week EMA over here. So let's pay extra attention on how Palantir is going to behave in the next few days, if it is going to trigger this bearish engulfing or not. Of course, that I will keep you guys updated every single day, so that's a very good reason for you to subscribe this channel if you're still not a subscriber, because every single day we're going to talk about SPY, QQQ, Nvidia, Palantir, Tesla, AMD, and many other stocks together. We always analyze the market without any assumptions, gut feelings. We just analyze the technical evidence. We just discuss facts, and our strategies are always based on the technical evidence. So subscribe for more unbiased analysis. Thank you very much for your audience, my dear friends. See you guys tomorrow. Stay safe. Bye bye.